All right, I'm going to go ahead and use this chart to explain premium discount array value gap and change the state of delivery trading from this morning's trading in the ES E-mini futures on a 5-minute candle chart. First off, liquidity is the amount. Previous day high, Asian session high, London session high, previous day 50. And then previous day low, somewhere in there. We're not paying attention to it now. Wasn't important to us. Not for what we're talking about right now. CPI 830 open, huge spike. CPI is always going to do that. It's going to chase that liquidity really hard. And so we see it take out the London session, Asia session, previous day high in about a minute. And then it begins to deliver lower. It immediately creates a fair value gap right here. And I have it labeled as an inverted fair value gap, but that's hindsight. At the time that it creates a fair value gap, it's just a fair value gap. And context is important. So if this previous day high is, let's say, over here, and it doesn't get hit by the CPI movement, then I'm going to go ahead and treat this fair value gap just a little bit differently. I may think of it as a retracement and then a move or continuation to chase that previous day high. But today it went ahead and it took out previous day high. So now my anticipation is we should go lower after the CPI raid. And so what happens is we start to move lower, we hit that 50 and we start to bounce. And it's, again, context. In this bounce, if previous day high is not here, it's here, I may be inclined to think, okay, 930 opened, we're probably going to continue to take out that previous day high. We took it out already. So 930 open, done. We don't get any energy because it all moved here. It already took out the previous day high. And so now we're talking about where we take a trade. The expectation is that we're going to go lower. And my target is a 15-minute fair value gap imbalance below the previous day 50. Okay, so at 930, we get this dud of a move. So it being shorthanded, we know that it's telling us it's not strong enough to continue to go up. So our anticipation of it falling is correct. It's going to keep going. We're not going to go ahead and chase this. We're going to wait. Change in state of delivery needs to be confirmed. We could have taken it at the 50 right here before we get confirmation of change in state of delivery, and you would have done well. But that's not how you trade. You wait for confirmation. So we get that confirmation as this candle closes outside of this fair value gap, which is now an inverted fair value gap. And we're going to look for a retest. And in that retest, that's a verified entry. Okay. So we get retest here, verified entry. You enter as soon as it touches this fair value gap. You can do whatever it is that you want to do with it. Not financial advice. And then 10 o'clock, new home sales, another large news event that happens. So we get liquidity injected into the market and it begins to shoot down. And now we know at that moment, probability for us to go ahead and take out our first target at that 15-minute fair value gap imbalance is really high. And so you're just going to go ahead and allow it to move to, target, and then you're going to get out. So if we go ahead and we talk about this in a meaningful way, we get CPI sweep, we get displacement, inverted fair value gap on the change of state of delivery is confirmed. We get a retest and then we execute on that retest. So where do people fail or come up short? It is not waiting for the confirmation and failing to wait for the retest. Again, today, if you would have taken this here, you would have done well. But that's not always the case. Benefited from there being several different events happening within the same block of a couple of hours, right? So we had a retest, and then immediately after that, we have new home sales, volatility injection, and price just moves away. But if it's not, say this is happening at, 12 o'clock, this news event is happening, then you may look at something different. This may be something that pulls and retraces higher, and then you're playing around as that is inverted fair value gap, and then you start getting a little bit more weary because you entered too early, you're feeling like it's taking too long, and then you get out of the trade either at not at the profit margin that you wanted or at a loss. So do me a favor, comment below, let me know how you took this trade, if you took it, and maybe comment one of your own charts and how you go ahead and how you understood premium discount arrays, inverted fair value gaps, and change the state of delivery on trades that you've taken.